Once a month or so, we invite financial analyst Michael Campbell to give us his 2 cents on trillion-dollar debts, faltering economies, market madness, and dropping currencies. U.S. Federal Reserve Chair Ben Bernanke has warned the U.S. economic recovery is close to faltering, and that always has ramifications for Canadians. It is my pleasure to welcome Michael Campbell back to Studio 4 to tell us more. Nice to see you again.
And there's lots to tell.
No kidding. We always ask you to show up when the news is really bad.
Well, isn't it, it's actually true. My phone sort of starts ringing once it's bad news. I said, can we do this when there's really good news out there? But it is a difficult time. I've said that we're going to look back on this period of time and it'll be the textbook material. Sort of my grandchildren and great-grandchildren will look back and say this was a major transitional period. Not just this year. I had written earlier on, in 2008, 2009, that 2010 would be the year of Greece, but it was the canary in the coal mine. So we are watching a major transition, especially in Europe, but I believe it comes to the States in a major way, say 2013, 2014, much more prominent than it was even in August when we were talking about debt ceilings and stuff. This is change.
So, what is the difference between the market crash in 2008 and what is going on today?
Well, one similarity, and that's the dangerous one, is that we're looking at the banking system woes in Europe this time. We are looking at banking system woes primarily in the States that did extend to Europe, and it will be the same kind of way, but centered in Europe. That's the similarity. That's what scares the dickens out of people. This is where we're a lot better off, though. When we came in 2008, our companies, for example, the major companies around North America were in real trouble, a lot of them. Very few had, were flush with cash. Well, they've used the last couple of years to kind of get their house back in order. So that's a much more positive step. We went through some very painful times, 2008, 2009, the restructuring, those kinds of things. And the auto industry would be a great example for people who don't follow it really closely. General Motors or Ford are in a lot better shape right now than they ever were coming into 2008, 2009. So that's the major difference. But again, it's the uncertainty created by what is this going to look like? Like if Greece will default. I mean, I've been saying that for 2 years. It was just very clear. And I think what's been going on behind the scenes is how do you protect the banking system when they do? The people who lent them the money, how do you protect them? So that's what that's been doing. And I think we're going to have a resolution of this fairly quickly here in the next month or so.
And are you saying the banking system, meaning the European banking system or the Canadian and the U.S. banking system? Whose banking system?
We're not going to, good point. We're not going to be unscathed in North America like Chase Manhattan, Chase Morgan, and they're in a little trouble. But the real problem, of course, is centered in Europe. It's centered in the German banks and the French banks who've done a majority of the lending. The Greek banks are already in trouble and they've been having to be shorn up. But the key is it's coming out of Europe. That's where the center of the problem is. Again, very much like the subprime problem, the center of it was in the United States, but it does spill over. The other spillover effect is, of course, what's the economy doing? Because China's economy is slowing down. The U.S. has never really got out of their recessionary pressures. Yeah, and of course Europe. I mean, I think it would be delusional to think that Europe is going to have so many robust numbers in the next several years. It's just how long that's going to take.
So bank meltdown in Europe means what to me?
Well, exactly, and I'm glad you're asking that, though, because it already has meant something to us. For example, we're seeing money coming out of Europe and looking, and keep in mind, there's only about 3 places you can have these major pools of capital go. Canada is too small. I'll give you a quick example. $3.5 trillion trades a day in the currency markets. Well, that's about 2.5 times the size of the Canadian economy in a year. We're a small player internationally. The big pools of capital are Japan, U.S., and Europe. So money looking for, and right now, even with the U.S.'s problem, it still looks better than Europe. I mean, its problems aren't on the front burner at this point. So money's coming out of Europe, goes into the States with these problems. Presto, our Canadian dollar, the American rises, Canadian dollar drops. Also, of course, we're looking at a worldwide economic, slower economy. It depends how weak it gets. Demand for commodities has dropped. Well, Canada's perceived as a commodity country too, especially energy prices.
Sure.
So the loonies dropped. So right away we felt the impact with a lower loonie. We felt the impact on the Canada pension plan and anyone else who's lucky enough to be part of a public sector, private sector pension plan. We've seen it in our RRSPs. This is the sort of calamity that we've seen develop. So it has an impact absolutely immediately, whether you're crossing the border into Seattle and Bellingham and you thought you're doing shopping, well, it's a 10% shift.
Right.
Whether it's, as I say, commodity prices going down, that will have an impact on government revenues. We're seeing it right now. We're feeling it right now.
So where does one invest? in what you might call a jumpy market.
Yeah, one of the things, though, that's been very difficult about this market is that the asset classes have all moved together. And I suspect that that's because it's a liquidity problem. This is a financial problem first, economic problem second. Economics are getting the sort of the spillover of this with, as I say, the lower economic growth prospects, et cetera. But it's a financial problem. And for example, you need cash. So you sell your RSP.
You got that right.
Yeah, there you go. You sell what assets you have. Well, that selling brings prices down. Well, we saw selling in gold. We saw obviously selling in silver, across the commodity, across the stocks. Everything was getting sold off. So it's been a difficult place to find safety for investors. That's why they went into, as I say, Europeans have gone into U.S. Treasury bills, for example. Cash is an investment decision, you know, and even though we're getting stinky rates of return, like 2%,
Right.
you're also not involved when you look at markets throughout the world. Stock markets around the world have taken a real hit. In fact, Canada is one of the better performing markets, being down about 13% or whatever it is, over the course of this year. The Americans have actually outperformed, obviously, the European markets, you can imagine that, but also the developing nations like Brazil, et cetera. So finding a safe haven has really meant cash. There's been very difficult to find alternatives to that. As I say, gold performed very well up to August, but I think the liquidation sort of push, they had a little bubble move there from 1600 to 1900. And again, when things hit the fan, people look to sell their winners, to raise cash, to feel more comfortable. That's clearly what's happening.
Become more conservative. So
yes.
Would a short-term bond be considered conservative, a government bond or
Our government bond
corporate
certainly
bond?
would be. You know, the corporate bonds.
Does it make sense?
Yeah, I would be more comfortable right now in government bonds, as I say, for somebody who's looking for that safe haven. Do you know that in the States, for example, in August, several different days, the actual yield on their shorter term treasury bonds, treasury bills, was negative. In other words, you said, I'll give you $1 million. You'll actually get less money when it comes back to you.
Great.
Because it's that old, people stopped worrying about return on their money. They just wanted the return of their money. So yeah, it's a very difficult environment.